wise enough to get ahead of it and say it like Rick Rule was telling us, that the companies, their margin expansion in this environment would be recognized by the market. So it's really interesting to me is that we've had gold and silver correct, consolidate, come back a bit lately, but still, we're in correction mode. But the stocks, after that initial wobble, they kept going up, and many of the producers are at all-time highs or near all-time highs. So like the metals went up, corrected, and the mining stocks went up, wiggled, and then kept going up. That's really interesting. And so bully for everybody that's long, yay. Don't forget, nobody goes broke taking profits. But to answer your question, no, I didn't buy anything. This darn stocks kept going up.
Yeah.
Fortunately, I already had some. Yes, if we get a big surge, particularly in gold and silver, tracking it, as that safe haven response to fear. The thing to remember is it's not just that it's short and it goes away. It's that whatever spike happens on a big political scare or geopolitical scare like that, it reverts to mean. So if the trend was already upwards, which is the case for gold and silver, then you get a big spike and it reverts to mean. Well, it reverts to the trend that's still going upwards. So it actually comes down to a higher price. If the trend had been downwards and then, oh yay, we got a big spike that saved us. Well, when that spike goes away, it goes back to trend, which is much lower. So in the current environment, it's too late now to try to get ahead of the spike. It is what it is. Nothing's ever safe in this world. Everything is one tweet away. I don't know if you call a Truth Social post a tweet, but you know what I mean, from radical change. But to answer the question, I've actually charted this. I'm not a chartist, but if you look at the peak for gold in 1980 and the peak for gold in 2011, and if you were to think that the January 27 peak for gold this year was the top, and you compare it to the other peaks, it looks completely different.
Okay.
So that's really interesting to me. Charting aside, okay, we went up to 5,600 about, and we pulled back, and we're waffling around 5,300 with the news this weekend. Who knows? We could be back to a nominal all-time high this coming week again. That would be completely different from past peaks. Which inclines me to, if the audience remembers what my answer was, is I said we could be in the blow-off top. That was not my base case. I thought we were going into a period of correction and consolidation, was likely, and I think that's what we're at now. And that is a good thing, by the way. In the be careful what you wish for department, if we go to a blow-off top, sure. Immediately, it would be great. Our stocks would go nuts and everything. But that would be the end of the market, because what follows the peak after the blow-off top is a bear market. Mr. Market doesn't care whether I want one or not, but I don't want one. And I don't see it based on what's going on in the world. Never mind the models and the charts. Just looking at reality, I see many, many reasons, multiple narratives, vastly supportive of anything governments can't print or lend into existence, but particularly the monetary metals and those critical minerals in short supply.
Lobo Tigre says the January peak wasn't the top mining stocks holding up, proves it don't chase the Iran spike. If oil drops, buy it. His gold picks beat GDXJ in 2025. The AI sell-off could create uranium and copper opportunities. PGMs moved with silver, so he'd add them on a dip.
But what I guess the caution there would be is if we do see prices go nuts on that fear trade, that would probably fade. So don't chase that. The useful thing is don't chase it. There's always a next fluctuation. Do not give in to FOMO Monday morning if you see everything just running away from you. There's always another fluctuation. Maybe that's not what everybody wants to hear. They want to hear, it's going to the moon. But experience suggests that geopolitical scares tend to produce short-term spikes. And by the way, this particular flare-up was widely telegraphed. Everybody and their cousin. I'm not a military expert, but everybody was, all the people on news. Looks like Venezuela. There's an armada there, and what happened last time? I'm going to be the honest answer is I don't know. I didn't think of it. I did look at Bitcoin because that trades 24/7.
Sure.
And I thought it was really interesting when the news broke that Bitcoin's immediate reaction was down. And it came back. But I thought, that just doesn't look like gold 2.0 to me. And Tether gold, I'm just going to have to admit I didn't even think of looking there. I'm an old wolf. I need to be taught some new tricks. So, okay, it's like the doctor says, there's bad news and good news. So let's go to the bad news first, get that out of the way. Yes, it's embarrassing. The GDXJ beat me. I think that's the first time that's happened. But
it was a crazy year, though.
A reader, and so I'm not making excuses. I've used that as a benchmark. There isn't really a comparable index to my portfolio. The junior producer, but the GDXJ is not really. Anyway,
yes.
It's the closest I've found as a reasonable, well-known benchmark that we can compare ourselves to. And it's usually been pretty easy to beat. This time, the market was so exuberant, I won't say irrational, because the underlying commodity moved. The market was so exuberant that those stocks really moved. And two things. One is, if you're the sort of person who buys low and sell high, you take profits as you go, you realize your gains, you look to rotate into the new opportunity to buy low, you're going to have a different result on a crazy year like 2025 than somebody who just goes all long, all in, right? I never go all in. I am, as crazy as it may sound, a cautious speculator. So in a crazy blowout year, the incautious speculator is going to outperform the cautious speculator. And I think we saw that in multiple fronts. The GDXJ was actually the least of it. There was a bunch of silver companies that have no silver except in their name, penny stocks that I was definitely not keen on that just went crazy. So if we look at just my gold and silver picks, they averaged 197% gains in 2025 versus the GDXJ's 166. So if we look at just my gold and silver, I actually did beat the GDXJ. But that feels like moving the goalpost to me. I always just measured my portfolio against the GDXJ, and so the fact is that they beat me this last year. The overall portfolio was, depending on how you look at it or measure it, 125% more or less. Not too shabby, but not 166 that the GDXJ did. The other thing, though, that I think an interesting takeaway here is, we're not just patting myself on the back or tooting my horn here, but I think there's a learning lesson here. Like, why did the incautious speculator beat me in 2025? Because of the type of year that was. And the other point that you were mentioning, and the other interesting, is like the silver stocks in particular. If you're a penny stock, going to 10x is not so difficult. If you're a $5 stock, going 10x is a lot harder of an ask. So if you focus on the quality companies, the producers, the royalties, or the ones who already have a discovery in hand that seems to have some economic merit, you're starting from a higher base. It's harder to get the same level of hockey stick result. And when a market doesn't care, anything with silver in the name goes up, again, an incautious speculator could outperform a cautious one. So I'm not trying to deny the results. I am saying that there's an interesting takeaway here. Because on a year like 2025, that works out. What about a year like 2012? And the goal here is to make money over time, to accumulate wealth. Getting lucky one year, if you did that, congratulations, no criticism on my part. But my goal is to make money for myself and my clients, if not reliably, but at least repeatedly or somewhat consistently over time. And you're not going to persuade me to throw caution to the wind and join the FOMO bandwagon just because it worked out so great in 2025.
Yeah, I think that's what I was hoping, the direction that you would go in. It tells us something interesting about the market right now and about yourself as well. So that helps a lot. And another point that I wanted to bring up, this is something you mentioned in, I believe, your newsletter over the weekend, mentioning that if this AI panic that we've been seeing over the past week and I guess further back as well intensifies, that could create a buying opportunity for uranium stocks, which some people might want to see. Oh, and copper. Okay. So do you think that does intensify? Are we getting to the point where we do see that AI correction that I think people really think should come?
Well, there's no question in my mind that we're seeing an AI correction. I mean, the mainstream is calling it the AI scare and the SaaS apocalypse and all these knock-on effects. So this is happening, right?
Yeah.
There's a few stocks that have held up pretty well, but there is a broad and substantial correction of many related and impacted equities. And that's interesting. The real question is, does it accelerate? Do we get to a tipping point where a real panic sets in and we get a waterfall type event? Because there's so much money in this that could have 2008 scale consequences if we actually did that. And I've been worried about that, or I don't want to say hoping, because I try to rise above schadenfreude. But clearly for everybody that's long, a big waterfall event, everything gets whacked, even gold and silver, like that immediate liquidity crunch. Even gold got whacked in 2008, even gold got whacked in 2020. Both were great buying opportunities, but they happened, right? And the stocks took it on the chin as well. So if you get a big waterfall event and something as big as this AI thing, you can say, oh, well, that's AI, it's got nothing to do with us. But when the broader markets go into free fall, you're not selling what you want to sell, you're selling, or your margin clerk is selling whatever they can get a bid on. So I was concerned about that. I was, having taken profits, I don't want to say I was hoping for it, but I was also, my concern was balanced by the awareness of a potential opportunity, let's say. I haven't been buying gold and silver stocks lately. I've made a bunch of money. I've got a bunch still, so I'm long. Haven't been adding. My idea is to buy low, sell high, not buy high and hope to sell higher. So I haven't been adding. If we got a big meltdown, that would unleash my buying. So there is that balance there. But I think more actionable is not just wool gathering about what I might do or might have done. I'm looking at the data now. I'm looking how the market's evolving. I think if it was a bubble that hit the pin and it was going to just pop, it would have already. It's been going on for weeks now. And this is maybe the best of worlds here because, a big pop, and if it spread to the broader markets, there could be a lot of carnage all around. And who knows how long it'll take to come back. I think it would, but it could be pretty scary, and a lot of people could get hurt. But what seems to be happening instead is more of, I won't say orderly, but a deflation rather than a popping of the balloon. There's money coming out, and that's good because it gives investors time. Instead of being forced to sell, like gold and everything, just because the margin clerk is on the phone saying, you're overextended. Instead of that, it's like, oh, well, this overhyped trade isn't working anymore. What is? Let's look around. Well, hey, look at these gold stocks. Right? So you could see a rotation here where people have time to choose what is working. And it's not just gold stocks, critical minerals. If oil turns around, not just because of the Iran thing, but just because its cyclical bottom is in, which I think was likely to be happening this year without the Iran thing. So anyway, I think that's interesting, and I think that's what investors should be watching. There's potential here for a serious rotation from last year's trade into, what's hot and what's working. And I think gold and silver still have the mojo. People on mainstream financial media, not as mainstream as INN, of course, but those other guys, even them guys, they're talking about gold and silver now. But copper's not going away, uranium's not going away, and I mentioned those two in particular because those are the ones I like best of the critical minerals. They have the most supply constraints. They are also energy minerals. And here's the kicker, right? If we're looking to buy low and this AI scare goes into overdrive and money is fleeing it, I think that would be near-term bearish for copper and uranium because those are seen as picks and shovel plays around the AI story. They're not, or that is a tailwind. We've talked about this. That's an optional tailwind that helps. So if that tailwind goes away, it doesn't change the fundamentals at all. But the immediate response is all those people who thought that uranium was just an AI play, and they bail, they create a buying opportunity. So if anybody has been watching this space and they saw the crazy swing from like 52-week highs to 52-week lows in the uranium stocks when the DeepSeek thing happened last year, just over a year ago, if anybody saw that and said, dang, I wish I could have bought that one. What I'm saying now, dear audience, is there's potential for something like that this year if the AI scare goes into overdrive and it puts other things on sale that are really not AI stories. They're, at best, it's a tailwind for those stories.